All right, folks, Occidental Petroleum, has been all over the news lately, swinging wildly, leaving many investors wondering, is the bottom in? We've done the deep dive, crunched the numbers, and today we're laying it all out for you, plain and simple, right here on Is the Bottom In? So, what's the buzz on the street about Occidental? Well, it's a bit of a mixed bag. On one hand, you've got the Warren Buffett factor. His significant stake always brings a certain level of investor confidence. But recently, the narrative has been dominated by some analyst criticism. Specifically, there's a lot of chatter about a potential OxyChem divestment, with folks questioning the timing and the price. There are concerns that this move, if not executed perfectly, could strip away a stable cash flow stream without adequate compensation, stirring up a bit of a hornet's nest in the investment community. Before we get too deep, let's quickly recap what Occidental Petroleum actually does. Founded way back in 1920, Oxy is a major player in the energy sector. They've got three main segments. First, the big one, oil and gas, where they acquire, explore, and develop oil and gas properties globally. Then there's their chemical segment, OxyChem, manufacturing a whole host of basic chemicals. And finally, the midstream and marketing segment, handling everything from transportation to storage and trading of energy commodities. Management has been pretty clear, folks. They're committed to robust operating cash flow, even with lower oil prices, exceeding production guidance, and making significant strides in debt reduction. They're also pushing hard on STRATOS, their carbon capture initiative, as a long-term value driver. Now this is where it gets interesting. We've got management painting a picture of strong operational performance, debt reduction, and exciting ventures like STRATOS. But then you hear the market chatter, those analyst concerns about the OxyChem divestment. It's like two different tunes playing at once, right? Our job is to reconcile these views and figure out what's most likely to happen. Let's start with our base case, which we're giving a 35% probability. This scenario assumes Oxy keeps doing what it's doing best: solid operational performance, efficient production, and continued debt crunching. We're assuming the OxyChem divestment, if it happens, is handled strategically enough to keep the ship steady, not sink it. STRATOS also keeps chugging along. For valuation, we're taking the current last 12 months LTM EPS of $1.70, stabilizing it for the next year to reflect operational efficiency and reduced interest, then applying a forward PE of 25 times. Why 25x? Because Buffett's involvement, successful debt reduction, and STRATOS's future potential give investors confidence, even with commodity price swings. This gives us a fair value of around $42.50. We're giving this a 35% probability because, technically, the stock has been consolidating, and while it's near the lower end, the fundamental story should provide enough support to keep it from a full breakdown. Next up, the bull case, which we're pegging at a 20% probability. This is where everything goes right. We see a significant, sustained jump in global oil prices, really boosting Oxy's core business. The OxyChem divestment, if it happens, is a masterstroke. Analysts sing its praises, and it brings in serious cash for more debt reduction or high-return projects. STRATOS, it blows past expectations, rapidly scales, and starts generating significant new revenue. All this leads to a massive re-rating of Oxy stock. We'd see EPS jump 25% to $2.13, and the market would reward that with an expanded PE of 30 times, leading to a fair value of $63.90. Technically, we'd confirm this scenario if the price decisively breaks and holds above $50, signaling a clear end to the downtrend. Now let's talk about the bear case, and this one has the highest probability in our analysis, at 45%. This scenario is triggered by a substantial and sustained drop in oil prices, hitting Oxy hard. The OxyChem divestment, if it goes through, is a disaster. Poor timing, low price, and analysts ripping into it. STRATOS hits major roadblocks, delaying its commercial viability. And maybe we even see a broader market downturn. This perfect storm would send EPS down 20% to $1.36, and the market would assign a much lower, more conservative PE of 15 times due to increased risk, pushing our fair value down to $20.40. We're giving this the highest probability, folks, because the technicals are flashing warning signs. The stock is currently in a multi-week bear flag consolidation, and if it breaks below that key $44 level, the next significant support is way down at $34.60. That technical weakness dramatically increases the likelihood of this downside playing out in the near term. All right, folks, let's pull up the chart and see what the technicals are telling us. Here's what I'm seeing. Oxy is currently stuck in a multi-week bear flag consolidation, trading between $44 and $49. This is typically a bearish pattern. The crucial level to watch right now is $44. If the price breaks below that, the next significant support isn't until $34.60. On the flip side, to truly break out of this current downtrend and signal a potential reversal, the price needs to maintain above $50. So we've got critical levels on both the upside and downside that we need to be watching closely. So, after all that, is the bottom in for Oxy? Based on our deep dive, with the bear case carrying the highest probability at 45% and the technicals showing significant downside risk if that $44 support doesn't hold, my verdict right now is a cautious not yet. The fundamentals for management are solid, but the market narrative around the OxyChem divestment, coupled with that technical weakness, means there's a higher chance of a downside move in the near term. We need to see that $44 level hold, or ideally, a decisive move above $50 to feel more confident that the worst is behind us. If you're looking to get into Oxy or add to your position, consider the levels we've discussed. That $44 mark is absolutely critical support. If it breaks, the next level to potentially look at could be around $34.60, aligning with our technical analysis. For a more aggressive, value-oriented entry, if the bear case truly plays out, our bear case fair value is $20.40, though that would require a much more severe downturn. On the other hand, if you're waiting for confirmation of a new uptrend, look for Oxy to maintain above 50 before jumping in. All right, that's our take on Oxy. If you found this analysis helpful, do me a favor. Smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. And I want to hear from you in the comments below. What are your thoughts on Oxy? Do you think the bottom is in, or do you see more downside? Let's discuss. Now, a quick but important word, folks. All content presented here, including any opinions, analyses, or predictions, is for informational and educational purposes only. This is not financial advice, and you should not construe any such information or material as legal, tax, investment, financial, or other advice. Investing in financial markets carries inherent risks, and you could lose money. Always conduct your own due diligence and consult with a qualified financial professional before making any investment decisions. I am not a financial advisor, and I do not know your personal financial situation.